Hi, this is Zach here with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe for Sunday, the 12th of May. Starting with the FTSE 100, which is making its way to the big target we had at 8,500, which was the top of the rising 2007 trend channel and also the top of a rising December trend channel. We're able now to upgrade the potential upside here, a wider channel there from November, top of the channel there heading for up to 9,000, which I suppose we might be able to gingerly pencil in for the end of June. The current situation, though, is that we would only expect that while we remain above the late April resistance around the 8,200 level. So above 82, looking for 9,000. If you're trying to come up with a tighter stop loss, it would probably be around the 83.10 level, which was support earlier this week. RSI obviously very overbought at the moment, 81 out of 100. So there is scope for a pullback, but there's still a decent chance we'd hit 8,500 first before a pullback actually appeared. Moving on to the DAX, and here we've got the situation where this has pushed into higher ground, and I suppose in some ways following the FTSE, but we obviously had our highs before back in March, April. Top of the channel there up to 19,300. Looking for that as soon as the end of this month. We're really lucky, but obviously June, a more likely scenario. 18,600, the old resistance area, and that should now become new support for this market. Interestingly, even though we're at the higher highs, we are not actually officially overbought territory on the RSI scale, 69 out of 100 rather than the overbought 70. Next up is the Dow Jones, and here you can see that a great progress after that bear trap island reversal, so gapping down in April and then gapping up in May after a second gap down. Current position is that the longer we stay above recent April resistance around 39,000, looking for obviously a retest of the best levels just shy of 40,000. Best case by the end of next month up to 41,200 on the top of that rising trend channel from September, October. Not expecting anything worse now than a test of the 50-day line, 38,700, which is now rising. That line is at least. Moving on to Bitcoin, which has been slightly off sorts since the halving last month. At least we're holding above the 60,000 area and above the old, the initial May support there, 56,600. Still the chance of testing that line there from back in, the end of February. That's around 57,600. Also the chance of testing old February resistance at 53,000 is a worst case scenario. That might coincide with the meeting with the 200-day moving average, currently 51,000. The other thing to note, probably the most important thing maybe at the moment, is the way that the RSI is still below neutral 50. We haven't been above the 50 level for now at least a month, and therefore the easiest thing here is just to wait for RSI 50 plus to appear, or a break of the 50-day line and that March resistance line, 65,400, whichever is the first there. On to gold, and here you can see that we've made good progress breaking the neckline resistance there around the 2365 level. Above that, looking for rather simply a retest of the best levels ever, 2448 by the end of this month. Ideally, there's now no price action back below the 2320, 2330 area on the floor of that rising February trend channel. Moving on to the stocks, and starting off with Aptamer. Here you can see that shares have bounced above a bear trap, double bear trap gap reversal, two gaps up there last month, and finding support above the top of the last gap. 0.6 above that, looking for a penny as soon as the end of next month. Good progress at Alkemy, which basically was flagged by the break of that resistance line there at the beginning of March. That resistance line there from, I suppose, the early part of last year, and hitting the price action around the 80 pence level. Since then, we've had a sideways shuffle above a rising 50-day line and looking for the 200-day moving average on the top of that rising trend channel from January around £1.11 as a minimum target. Obviously, after that, there's not really much on the chart between the 110 area and £1.40, which hopefully could be seen by the end of next month. Ideally, we stay on the right side of that April resistance around 96 pence mid. It must be a bull market if Blencoew is up near its highs. Here we've had a decent rebound after the gap higher that we had and the gap fill test that we had back in April. Currently seeing progress within a broadening triangle from March, and top of the triangle there up to as high as 6.5 pence, which we're hoping for by the end of this month. The key here though is that 6.5 pence is basically the major 2-year, 3-year resistance for the shares, so a break of that and we really could be off to the races and potentially up to 10 pence as soon as the end of next month. The reason for the relative optimism is the way that both the 50 and 200 day lines are now rising. That suggests that we're going to have a golden cross later this month, and the golden cross, or a golden cross, is typically the strongest part in the cycle. Moving on to capital metals, and here decent price action building up for a breakout through the sticky 5 to 6 pence area. If we can break through that, then it's the top of the rising trend channel from the summer of last year, as high as 7.5 pence, and we're looking for that perhaps even as soon as the end of this month. There's still time for that to happen. Moving along to a situation which I haven't looked at for ages, largely because it's been a disaster area, but here we've got Serata, and we've got what I call a bear trap island reversal. In fact, it's a double gap down and then a double gap up, so that's extra strong in terms of the notional charting power there. Looking for the shares to at least head up to the 200-day moving average at 65 pence and just up to the top of that first gap down that we had back at the beginning of last month. And the upside valid here while we hold above recent neckline resistance at 47. So basically the simple message is above 47, looking for 65 on Cirata. Moving along to Katoro, and here a decent end to the week with bouncing off that rising trend channel from back in, well, basically this time last year. That's around this 008 level. Above that, looking for up to 0.15 by the end of this month, if this is indeed the big turnaround for the shares. Another gap situation in the form of Kavango, and here gapping up again. We've gapped up for the third time in the last couple of months, or the last month in fact, and looking very strong indeed, above 1.35 on an end of day close. One of our previous targets looking for 1.65, perhaps as soon as the end of this month, especially if we can remain above 1.2 pence in the latest gap. On to Microsalt, which is looks like it's reviving itself, and here picture helped along by the rebound of the floor in that rising trend channel from back in January. The level there around 68 pence, we broke above the 50-day line, 77 pence on Thursday, and above that looking for 105 by the end of this month, or even sooner. Obviously it would be nice if we could get a retest of the best levels of February by the end of this month as well, but the key here is holding that 50-day line. On to Neo, and very pleased with this turnaround here. It was spotted early, and the break of that line there at 0.53 had a target, or gave us a target of 0.7, which looks like we hit right on the nose on Friday. End of day close about 0.7, and we're looking for up to a penny by the end of next month, which is the upper parallel of that broadening triangle base from back in January. This stage only well below the 50-day line now, 0.58, really delaying the upside scenario. Another stock which I talked about, in fact, this week's small caps update, week in small caps, is Power Metal, and here interesting to see the shares back so far after that peak back in February. The old support area for the shares was between 11 and 12 pence, and we're really looking for support to come in above that after the consolidation that the shares had. The initial target here up to 15 pence by the end of this month, and looking for up to the 16 or 17 pence level soon after that. But it looks as though the shares have overshot really on the downside below 13 pence, having hit the oversold RSI in the last few days. Another stock which has been in the wars is Polarean, and here you can see that we've got a trend channel base here. We want to see an end of day close above the 50-day line, as was suggested. I think the last time I looked at this stock, above that, looking for 5.5 pence later this month. On to Phoenix Copper, which was currently trading a bit like a sort of a pinball, with the the range between 13 pence and the 200-day line at 19 pence. Above 19 pence, we're looking forward up to 22 or 23 pence by the end of this month. But one suspects that that was the last time we'll see a sub 14 pence price there for Phoenix, especially given the way that we've bounced off RSI 50. It'll be very surprising now we don't finally make it into the 20s there. Another stock which is reviving itself at the moment is Sareum, and bouncing off a still falling 50-day line, 22 pence above that. We're looking for the top of that broadening triangle from February up to 46 pence by the end of this month. So a punchy call there, but looks like quite a punchy setup there with a double bounce for the RSI off the neutral 50 level. On the last two, the first one is Tertiary Minerals, and here you can see that we've had one of our favorite setups, which is the gap close buy signal. So gapping down back there in February, then closing that gap basically about a month ago. We actually gapped up again, but bounced above a rising 50-day line at 008. The message at the moment is that above the 200-day line at 0.1 pence, looking for up to 0.17 by the end of this month. So really expecting this situation to turn around and stay turned around on this occasion. Finishing off with the Unicorn, and here we've got the 50 and 200-day lines both rising. The share's initial target there up to 12 pence, which is the top of a rising trend channel from back in December. If you're a fan of the shares are looking for a bit more, then it would be the upper parallel of that channel up to 17 pence by the end of next month. Only cautious traders would wait for an end-of-day close above 10 pence, the old December high, before penciling in 17. That's it for me today. More updates during the week.